Hey value investors, thank you for joining me. Right now we're going to get into a stock, go over some graphics. Before we do that, just want to say, check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you which stocks I own and why. I'll give you balanced arguments for the stocks I own. What's more, I come up with one new investment idea a month, so you can do a totally free trial to see if it's for you. Deep Value Returns on Seeking Alpha. Let's get started. Hey value investors, thank you for joining me. Right now we're going to discuss Amazon and why I believe Amazon is undervalued. We're going to talk about Microsoft Azure and how that relates to AWS. Then I'm going to focus on Amazon's retail operations and why that is like a toll bridge on our lives. Then I'm going to elaborate on AWS as a cash stream for Amazon. Finally, we're going to get into its valuation and why I believe there's a bargain opportunity in Amazon. So let's get started. With Amazon, you can see here that its revenue growth rate is coming in at approximately 26-25% for Q2. Now, why this matters is because if you look back to 2019, you can see that Amazon was not growing at that speed when the economy was strong. So even when the economy was strong, it was still growing at approximately in the ballpark of 20-22% on average. So even though the economy, as we know, is particularly weak in 2020, Amazon is still pacing ahead, irrespective of the economy. And that's really what's key here. It's just that machine that just keeps on growing and growing and growing. Then I want to talk about AWS. So AWS, from the results we can see in Microsoft Azure that came out last week, Microsoft Azure at the end of Q3 2020, they got a different fiscal year, so it kind of confuses things. But if you look back to the end of the March quarter, Azure was growing at approximately 61% FX adjusted year over year. And then we went through COVID, and many people were expecting that everything would go cloud, and actually Microsoft decelerated. So the revenue growth rate for the quarter ended June, which is their fiscal Q4, was actually 50%. So there's a 1,100 basis points deceleration from Q3 into Q4. Now, many investors were actually thinking the opposite, that because of COVID, because of shelter in place, that cloud would just go on and everything would accelerate on the top side. But actually, it looks like it's a case of narrative being one way and actually facts pointing in the other way. So it's difficult to know exactly how Azure AWS will perform, but objectively we should brace ourselves for a slowdown here, but I don't think that's really that critical, and I'll come back to why I don't think that's critical in a moment. But before that, I wanted to just talk about Amazon as a toll bridge on our lives. So with Amazon, its retail operations with COVID, it just becomes that kind of a habit. It's just such a habit to go and do your shopping on Amazon that it becomes a case of it's just easy, it's pain-free, it comes quickly, you got the idea that you're getting a bargain. Now, why do I say idea? I say idea because Amazon, I suspect, is very, very aggressive with their prices. I believe that Amazon uses a lot of AI to optimize for you as the consumer what you are likely to buy in terms of whether the weather is going one way, in terms of the holidays. I suspect that they use a lot of AI, but they don't really talk about that much through the earnings call. Why would Amazon not talk about AI in its retail operations? It certainly does talk about AI during its AWS section. And the reason I suspect it doesn't want to put more details into the light about AI is that Amazon is already under that scrutiny of being possibly a monopoly, and it doesn't want too much scrutiny anymore on that level. So if you think about it, just if you take a step back and you think about your shopping experience, you're most likely just going to go to default and you're going to go into Amazon and you're going to shop around the first page, maybe the second page. But Amazon knows that. Amazon knows you as the consumer better than you think, and they will just push forward the products that they can optimize for their own profit margins. And as you probably know, that Warren Buffett quote that the chains of habit are too light to be felt until they're too heavy to be broken. And that's what I think is the key here to this investment. Now, I just want to touch briefly on Amazon's AWS cash stream. So whereas many other companies have had to over leverage their balance sheets to get access to cash, Amazon's AWS, I'm not going to put it as a high growth avenue anymore for the investment thesis to work out, but I'm going to look at it as a cash stream, because ultimately, although Amazon's AWS makes up approximately 13% of its revenues, of its total revenues, it makes up approximately 77% of its operating income. So you have this consistent and predictable revenue stream coming in, which is AWS, which allows Amazon to aggressively invest in its retail operations. So this is what I think is the key to the thesis right here. Amazon doesn't have to get access to the credit markets, and even though right now interest rates are low, you can't always expect interest rates to be low. So by not over leveraging its balance sheet, Amazon is very intelligently just continues plowing through its AWS, and its AWS continues bringing in that steady cash infusion. Now, you may say AWS is very, very important to Amazon, and it is part of the growth story. And I would agree with that statement if this was 2016, 2017, possibly even 2018. But right now, AWS has to come against Azure, and Azure is a formidable beast. So I don't think that's the case in 2020, and from my positioning for 2021 and 2022 with Amazon, it's not the thesis. My thesis is that toll bridge. My thesis is looking for at least 50% upside potential over the next 2 years by being long Amazon. Now, what I will say here is that Amazon on a price to sales ratio is approximately 5 times. So it is not the cheapest stock in the market, and you could argue that it's probably more expensive than it has been for a while. Now, Amazon doesn't go on sale, and when it does go on sale, it doesn't stay on sale. So rather than staying on the sidelines and saying, okay, in my mind, I'm going to just wait until the opportunity comes to me, it's going to be too difficult. I believe that more money can be lost in Amazon by omission, by failing to act, rather than actually saying, I'm not going to market time. Market time is very, very difficult. It's much better to spend time in the market, spend time invested in something like a high quality company, rather than waiting for the absolute best opportunity to come at the best price, the best management, because that's not reality. Reality isn't like that. And you can read about that in a book, that you gotta wait for the pitch to come to you. But I mean, this is a case of theory versus practice. There's plenty of theoreticians out there, and if you come over to my marketplace, you'll see that in my marketplace, I'm very much of a practice-driven investor. I'm very much a focused investor. I have a very strong portfolio with a core selection of stocks. But I think in my mind that it's much better for you to be following many companies and understanding the tailwinds and the headwinds to those companies, rather than trying to dig down into one company, get emotional over that one company and think, okay, this is the one that's going to work out in my favor. That's not the way it works. So it's much better to try and understand, okay, this is a high quality company. Amazon is doing quite well, and Amazon has a strong toll bridge in our lives that every time it goes through it, you don't know what price you're going to get for that same product. You want product XYZ, and on Monday it's one price and on Tuesday it's a different price, but you don't realize that. It goes up by a few percentage points and down a few percentage points, and you have absolutely no idea. So this strong management, you just, you can't pay, as Buffett says, you cannot pay enough for high quality management. And, Jeff Bezos is not even overly paid, I think. I think that investors, just by being aligned with his strong execution team, you will do quite well over time. So we discussed several different areas today. We talked about why I think Amazon is undervalued. We talked about Amazon's AWS and how it compares to Microsoft's Azure. We talked about Amazon as a retail operation and the toll bridge in our lives. Then we talked about the cash stream from AWS and how that gives Amazon plenty of funds to be able to invest in its operations. And then finally, we talked about Amazon's valuation and why 5x sales, investors are not having to pay an exuberant multiple to become Amazon shareholders. Amazon reports its Q2 results this Thursday, so stay tuned for more of that. And as always, don't forget to subscribe and come over to my marketplace, Deep Value Returns. Find out the stocks that I own and why, with balanced arguments for the stocks I own. Thank you very much.